What's up, guys, and welcome to Trading with Matt, part one of our 3 video series on trading for beginners, intermediate, and advanced traders on how to mark up charts. So, for our first video, what we're going to be going over today is looking at a naked chart with nothing on it and learning how to actually mark our support and resistance zones, as well as looking at trends and reversals and candlestick patterns. But let's dive into it right now, and let's start with how we mark up our support and resistance zones and what we need to see in order to do those. So if you take a look at this chart here, what we're looking at is the 4-hour chart. We always start with the 4-hour chart to mark our zones. So as you can see here, we have an uptrend here, and then we have a lot of consolidation. You can go as far back as you'd like to, but typically what I like to look at is when I pull up TradingView, I'll pretty much go back about a month to 2 months to look at out my zones. So on USD JPY here, we can see that we had a bit of a double top. So we're going to draw our resistance zone there. Now our first resistance zone is going to be at the top up here. And I'd like to clarify that a zone is not always just a point at the top. For instance, if we're looking at this one right here, it's not just this point. It's not just this point right here, if that makes sense. It's not just one point, it's a zone. It can trade anywhere from here to here. So what we're going to do is draw out our zone, and like we have here, and we're going to kind of extend it a little bit into the candles. So this is going to be our first zone. This is going to be called our resistance zone. So we'll type that out there. That way everybody knows that that is our resistance zone. And we're going to go ahead and put that up here. You can make it as big as you like, but for sake of learning here, this is where we're going to put it. Now our next zone is going to be our support zone. So we're going to again take our rectangle tool here and find a point where not only is it an old resistance like it is right here, but it's also a new support. So we've created a new support here. As you can see, we've tested it twice, if not almost 3 times after it broke structure right here. So what we're going to do is draw this zone as a resistance for the first part and a support for the second part. So right here, it was acting as a resistance. It tested it once, it tested it twice, it tested it 3 times. It even had a liquidity draw right here before it came back down and broke it. So this was a resistance point. We're now identifying it as a support. So what we're going to do is write out support there, and we're going to go ahead and put that right there. So now that we have identified our support and resistance, we can look for a trend. In this particular chart here, we actually don't have a trend really. Overall, it is in what we call consolidation. So consolidation is what you see right here. What that means is that we are within a range. You can see that we did go up, yes. We did come back down, yes. We did go up, we did come down, we did go up, we did go down, and we're going back up. However, this right here is a range. So the distance between a resistance and a support is called a range. Now, when we're looking at a range, the only time we'd want to take that is if we're seeing a reversal. So for instance, let's take a look at the first reversal. The first reversal on this one was right here. We had a couple candles, and let's zoom in here a little bit. We had almost 12, 4, 8, 12, 16. We almost had a day's worth of candles that consolidated at a resistance point before we got a reversal. So what I mean by that is we had some long wicks, but the bodies of the candles pretty much were the same here. You had a bearish close on this third candle, and on this fourth candle, you also had a bearish close, bearish hammer, which is a sign that you're going to see the candle reverse and the chart move toward the downside, which in this case we did. So now that we've identified a reversal at a resistance zone. Here's our reversal. Now we wait for our entry. Now our entry point would have been the third candle after the hammer candle. So you had the hammer right here, as you can see. And I'll zoom in a little bit more here just so you can get a better picture. We had this hammer candle right here, which is a very strong reversal candle. We then had a green bullish candle close, which could be confusing, which is why we wait for our confirmation. Finally, we had a bearish close that broke the previous lows. So this would be your low line, and we can actually draw that using a horizontal ray. But our low was right here. Our previous low was right there. And as you can see, we broke it right there. That wick came down and broke our previous low. So we know that we're typically going to see a retracement of that wick and then a downturn. Our entry would have been off of this wick right here after we saw the retracement up the zone. Again, our entry would have been the retracement when this candle opened and came back up to fill this wick right here. We would have taken sells right here toward the downside. Now, you may be wondering, how do we know that? Well, there is a shift in buying and selling power, for one. For two, we broke the consolidation that we had right here and we rejected our resistance zone. So the consolidation was broken right here when we had this candle break the previous lows, like we talked about. And then we had a massive red candle. Now you could also wait and get more confirmation on the 4 hour right now. But if we drop down to the 1 hour time frame, you can see that we did in fact break our previous low on this hour candle. And then here was the retracement we were talking about. That retracement that we mentioned was this hour candle. This is where we'd get in. This was the retracement we were talking about. Typically what you'll see when this happens as well is a retest. So now that we're on the hour, we're going to redraw a new support and resistance. This is now scaling down to a smaller time frame to figure out where our new support and resistance zones are. So let's draw a new one. We have a new support and a new resistance. This is our new support when we were consolidating. When we were consolidating right here, this was our new support because we hadn't broken it here. We retested it here. And we actually had a candle wick come all the way back up and test it here. It wasn't until the third candle or the third confirmation that the candle actually drove down through what is now our new resistance zone. So with that being said, we now have a new resistance. So let's go ahead and put that up there. We now have a new resistance now that we've scaled down to the 1 hour time frame. And what we saw here was a break and retest. So a break and retest is when it drives through the zone, completely through the zone, like you'll see right here. You had a break of the zone right here. It came back up and retested. So we saw it come back up and retest. And now at this resistance, which is now our new resistance, it rejected. This is a great signal for an entry because now we saw it move to the downside. And if we were to measure out what type of move that was, from the top of this candle all the way to the bottom here is 116 pips. Now that's a huge move. If you're trading on the 4 or the 1 hour time frame and you're looking to swing trade like that and wait in a trade for a certain amount of time where you can get these type of candle movements and this type of price action, this is a fantastic trade. What we did here was identify our support and resistance on the 4 hour time frame. We then moved to identify our support and resistance on the 1 hour time frame, and waited for either a break of structure, or in this case, what we got was a break and retest. Our consolidation was up here. We broke through what is now our new resistance. We came back up, tested it, and then immediately drove back down. That is a very, very consistent type of price action trading that you will see. So in this case, we would take sells based off of the break of structure. The structure was this support at the time. Now it's a resistance where we broke it, we retested it, and we took out the lows for 116 pip profit. Now, this is part one of part three. This was a very basic idea of how to draw up your charts and how to get in a very, very simple trade. Moving on, video two will be talking about market structure, trends, and high probability trade directions based off what we've already built and based off of with our support and resistance zones. So, if you like this video and you learned something, please make sure you like and subscribe. I have a ton of videos and I go live every Sunday through Thursday to trade the Asian session, and I will trade the New York session 1 day per week. If you like this, thanks for watching. Make sure to like and subscribe, and I hope everybody has a great trading journey, and I hope this helps you out.